Hello number curious friends, welcome back to our channel where numbers start making sense. Ever thought of football and other players in the world of accounting? Today we look at one of the most asked questions in sports finance. How can a club put a football player on the balance sheet? Short answer, it cannot. You cannot put a person there, but you can recognize the rights from the player's contract, and these rights from the contract are recorded as an intangible fixed asset. Under common accounting rules for clubs that report under IFRS principles, the asset is the registration and economic rights to receive playing services during the contract term. It sits under intangible assets alongside such items like software and trademarks. When a player signs, the club records the intangible at cost. Cost usually includes the transfer fee paid to the selling club, directly attributable costs to get the asset ready. For example, agent or legal fees linked to the transfer. Any variable transfer amounts that become payable when conditions are met. Day-to-day wages and bonuses for performance are expenses in the income statement and they are not part of the asset cost. After recognition the rights as an asset, clubs expense it over the contract length. Most use straight-line amortization. Let's have a quick look at an example. We start with the transfer of a player. Let's imagine we pay the selling club $20 million plus $2 million of agent and legal fees. Journal entry would be debit player registration right in fixed assets $22 million, credit cash $22 million. If the contract length is 5 years, we will get straight-line amortization of $4.4 million per year. Journal entry each year then would be debit amortization $4.4 million, credit accumulated amortization $4.4 million. In the end of year 5, you will have accumulated amortization of $22 million and the net book value of registration rights of 0. And again, always two sides of a transaction. You see, all our bookings are paired and debits equal credits. Let's have a look at a couple of real-life examples based on the extracts from the annual reports of football clubs Barcelona and Chelsea. But before we do that, if you're enjoying this video, hit like, subscribe and ring the bell button. We would appreciate your support here. So, Barcelona's balance sheet shows players' acquisition rights in non-current assets of almost $219 million in June 2024. There is also a note 5 for that. Let's check it out. Here we can see that the original cost of football registration rights was $472 million. And accumulated amortization of them was $250 million, which together with some impairment of $5 million gives you a net book value of around $217 million. How does it look like for Chelsea? It has intangible assets of £1 billion. Quite a difference to Barcelona, right? Here we see a reference note 13. Let's have a look. So here we see that Chelsea acquired new rights for £553 million in the last fiscal year, and sold some rights with the original cost of $183 million. Together with the amortization, we see the net book value of players' registrations of $1 billion. So that's how it looks like in real life. And what happens when the contracts with players get extended? If the player extends after 2 years, the remaining book value is amortized over the new remaining term. That is the change in estimate. So adjust the future expense, do not restate the past. For example, if the remaining value of the contract was $3 million and it was supposed to end this year, this value needs now to be amortized not by 1, but by 3 years. That means amortization expense in the income statement decreases from $3 million to $1 million per year. If there are signs the asset is worth less, for example serious injury, sustained loss of a form or a decision the player will not be used, the club compares carrying amount to recoverable amount. If recoverable is lower, the club will record an impairment loss in the income statement and reduce the asset. How are homegrown players treated? Players developed in the academy usually have no significant capitalized cost because self-created intangibles are normally expensed as incurred. Their accounting value can be small even if their market value is high, and very often you would see that value as 0. Now we want to transfer the player to another club. When a permanent transfer happens, the club recognizes the intangible. For this you need 2. Compare sales proceeds to the carrying amount, which is cost minus accumulated amortization and any impairment. Take the difference into income statement as a profit or loss on disposal. Cash proceeds go to invest in cash flow. Now let's imagine you want to loan out a player and not to permanently transfer him. With the loan, the owning club keeps the intangible and continues amortizing. Loan fee received is typically recognized as income over the loan period. For example, if you received 5 million for 2 years, you will recognize 2.5 million per year as income, though you have received all cash already. It's a deferred income. If wages are shared, each club expenses its share. If a mandatory purchase clause triggers later, then derecognize the asset at that time and record gain or loss. Many transfers include transfer fees add-ons, for example for appearances, for team results and resale percentages. If an add-on becomes probable and measurable, the buying club adds it to the asset cost and amortizes over the remaining contract life. The selling club recognizes income when the condition is met and the fee is collectible. Sell-on clauses, which are the percentages of future transfer fees paid to the original selling club, create future income for the selling club only when the next sale happens. So, can you revalue the registration rights to market values in real life? In most accounting frameworks, you cannot do that each year. There is no active market in the accounting sense because each contract is unique. So, clubs use the cost model minus amortization and impairment. But what about impairment, you may ask? Normally, it is possible, but has to meet a few strict rules. Because for the club, the whole squad is what matters the most. One player alone cannot be a team. That's why, usually as long as the player is available for the main squad, even with a minor injury or in a poor form, there is no impairment at an individual player level. But if the injury is career-threatening, it can be an impairment indicator for the player's registration rights. So let's have a look where in the end things show up in the 3 financial statements. Balance sheet: intangible asset at cost less accumulated amortization and impairment. Income statement: amortization expense each period, impairment losses if any, gain or loss on disposal when sold. Cash flow: transfer fees paid or received are investing cash flows. Amortization is non-cash and is added back in operating cash flow under the indirect method. Now, a few common beginner mistakes to avoid. The first one, capitalizing wages or regular bonuses. These are expenses and simply flow through income statement as all other normal costs of running the business. The second one, forgetting to amortize from day one of registration. The third one, ignoring impairment indicators. The next one, failing to update for probable add-ons. And the last one, treating a loan like a sale. The asset usually stays until the permanent deal is reached. Now let's summarize the lesson and look at our key takeaways. Clubs recognize the player's contract and registration rights as intangible fixed assets. Cost is transfer fee plus eligible direct costs, wages are expensed. Amortize over the contract term, adjust for extensions, test for impairment. On sale, record gain or loss. Loans usually keep the asset on the books. Cash goes through the investing cash flow. Amortization is non-cash and is added back to operating cash flow. And that is sports players in accounting language. People are priceless, but contracts are assets you can measure. Thank you for watching, and if this helped, click like, subscribe and tap the bell so that you don't miss the next lesson. See you soon!